This afternoon we have Craig, founder and CEO of Beehive. Craig, thanks for joining me.
You're welcome. Great to be here.
Yeah, great. Look, Craig, you and I have known each other for a while. I think it was back in Singapore. We met face-to-face for the first time.
Yeah.
Shout out to Aaron,
Yes.
who introduced us. So, you look, and you've obviously come a long way since then, right? I think at that point when we met back then, Beehive was an idea. You were just kind of getting things rolling. Let's share a bit, let's say the voyage, right? The founding story. Where did Beehive come from? How did you get that idea in your head? How did that bee get in there? Let's say, right? And, a bit of the story of alternative finance in the MENA region. And yeah,
Sure.
how did it come?
Yeah, so Beehive, I guess the idea for Beehive, really early 2013. I was just exiting a previous venture back in the UK. I just sold the business to IBM. So I was starting to think about, right, what's the next kind of entrepreneurial journey?
After a bit of a holiday, I hope, right?
Probably not enough of a holiday, actually. I should have, in hindsight, I should have taken a little longer off. But, and then really just started to think about peer-to-peer lending in the SME space. This was something that was taking off in the UK, the US. And after a bit of investigation, it became quite apparent that there was nothing in the MENA region. There was nothing actually in Southeast Asia either at that time. And, kind of VC focus was all really on Careem and Ubers and, transportation. You know how these things move in waves.
Right.
So nobody was really talking about FinTech either at that point. So I guess once that idea gets in, and and he's okay, let's sanity test this. So I came out here a few times. I knew the regions because I had friends out here. You start to ask some questions, start to understand. Do you think there's an opportunity? That starts to build up. You begin talking to people who could potentially become part of the team again. Because what was really important is I was going to do something and come out here to set up. Then I needed people who had worked in the region and, understood the region and the mentality. So, I was able to convince the exiting group CEO of MSMBD, which is one of the largest banks here, to come on as the chairman. And that was really critical from a credibility point of view.
Sure.
I could bring the kind of entrepreneurial nous and drive. And then it was really important making sure I got a good team around me. And we put all that together. It probably took 9 months, and then we launched at the back end of 2014 into the market. So we were an SME-focused peer-to-peer lender, aggregating all individuals' investments and letting the platform facilitate the lend to the SMEs. And then we were responsible for KYC, AML, credit assessment, collections, the whole end-to-end game.
Why the SME segment? You've seen so many, organizations that have started up and really focused on, let's say that, using P2P as a financial inclusion tool for the consumers out there. When you came here, you saw a real opportunity, a real gap, let's say, on SME, or?
Yes, I think, SME is underserved globally. So MENA's no different in that sense. It's just that, consumer finance here was particularly well catered for. Credit card penetration is particularly high here as well. And the SMEs were massively being underserved. Right? So the banks would like the SME sector from a CASA perspective, the current account, savings accounts, but they had a general aversion to lending to the SME space. And part of that is because you've got a big expat population here. So, there was a lot of flight risk in the SME space, just as there is in any other of the lending spaces. There was, back in 2013, 2014, there was a paucity of data sources, right? There wasn't a credit bureau at that point. There is now. That's made great strides. But at that point, there wasn't. So part of the challenge was actually building things like credit models in this type of market. You couldn't take a typical credit model from the UK or the US and apply it here because the dynamics were so much different.
Sure.
So, there was definitely a gap. It was a challenge. But I think sometimes as an entrepreneur, the challenges are the things that excite you. Can I crack it where maybe others haven't? So you're also driven a bit by the challenge.
Yeah. You touched a bit there before on the regulatory and compliance side of things. You know, obviously, as you said, when you came in here, it was really green fields, right? There was really, you know, little or no bureau, et cetera. How have you seen that evolve, and how do you see that evolving in the future, the kind of regulatory and compliance side of things? Yeah, because often you have these kind of central banks that are trying to catch up, let's say with innovation, right? And you were breaking new ground, right? So how did that go?
Yeah, I mean, it was a challenge in the early days. Just as I said, because being the first to do something like this in the market, it's not only, you know, you're trying to do business or you're trying to kind of fit within regulations. When there aren't regulations and, you know, the economy doesn't understand the models, you spend an awful lot of time explaining and educating, right? And that can be good and bad, right? You know, you're the first out of the gate. Therefore, you are driving maybe some of the agenda and the narrative. The flip side of that is you're bearing all that cost. You're bearing that time, that resource, that energy. So if I look at the last 10 years, there's been a massive kind of catch up. The credit bureau now has got an awful lot of different data sets and information. I think they've come on, you know, leaps and bounds. We became the first regulated platform back in 2017 by the DFSA, and you know that was the result of ongoing conversations over a number of years where we would just educate them as to what we're doing, how we're doing it. We're following best practices out of the UK at that time. So I think it's like most conversations with a regulator. You know, it's first to kind of seek to understand what they want to understand,
right,
and then engage and go on that journey with them, because you know they always want to speak to people who are doing the business, but they also want to understand how it's been done, where are the risks, and you know, as you'd expect. So we built some very good relationships with the regulators and continued to do that, and a lot of the regulation was actually written around our operating model and our standard operating processes.
Right. So really a collaborative approach.
Absolutely, right? Yeah. And I think that's the only way you can do it.
Yeah. And what about partnerships? I mean, did you build it all yourselves, right? Or, you know, have there been any kind of significant collaborations, partnerships, let's say in the voyage, let's say, that really helped you accelerate or helped you fill a gap that you couldn't fill on your own? Yeah,
so I mean, from a tech perspective, we always developed in-house.
Sure.
Right? So I'm a big believer of you need to kind of control certainly the you know, the main engine,
the core,
the core. You need to control that because it's fundamental, and a lot of times it can be part of the secret sauce. So we developed all the tech, but then when we started to look at go-to-market and how can we enter new markets, right? So we went into KSA. We went into KSA through partnership. Right? So we worked with one of the banks there and the development bank, and you know, essentially we were their SME lending department.
Right.
For all intents and purposes, they were the balance sheet, right? And they also had the regulatory kind of oversight and cover because they were they're regulated by SAMA in KSA. So that's how we chose to go into KSA. Within the UAE, we also looked at different partnerships: Mohammed bin Rashid Fund, Emirates Development Bank. So I'm a big believer that, and this goes not just for fintech, but other tech areas. Ultimately, you know, fintechs agitate. They shake up the market. They hopefully drive the customer experience up. But ultimately, a lot of it is about coming together with some of the traditional players and collaborating. You know, if we can be a change agent in the market and a change agent for some of the larger entities, then they can bring some of the wealth of resources, you know, their reach. And hopefully you get the synergies by bringing those two parties together.
Yeah. You touched a bit there on secret sauce. You piqued my curiosity, right? You know, and I'm not asking to share your secrets, right? But you know, from a tech perspective, you know, I agree with you, right? There've been a lot of attempts, I think, to disrupt the market from a fintech perspective, and then they're taking, you know, external elements and saying, well, I'm going to buy that core banking platform from over there. I'm going to buy that lending module from over there and plug it together. and that might get you, let's say an accelerated approach, but then it's obviously very difficult to differentiate yourself as the market starts to mature, right? Where do you think, lending's not new, right? SME lending has been around for a long time. Where do you think, let's say put the right bets behind pushing on developing, let's say something unique, right? Is it on credit risk? Is it on access to different data sets?
So no, you're right.
Experience.
No, you're absolutely right. That I have this discussion many times with people, and I say, listen, technology is an enabler, right? The fact that we've got some tech and we brought this together. Okay, fundamentally, you still need a proposition, and you still need something that resonates in the market. From our perspective, we always knew in the early days, it's going to be our credit models. Right? It's going to be the credit models, what we've created, the fact that we continue to enhance them, and ultimately with credit models, it's fairly binary because it comes back to the performance of the book. Yeah. Right. So what are your NPLs? Yeah. Right? What are your defaults? And that's how you're judged. And then over time, you make sure that you continue to evolve the models. But our tech platform, is there anything particularly unique about the tech? Not really. You try to give the best, obviously, customer experience. Sure. You try to remove the friction as much as you possibly can. But ultimately, the differentiator for us is the performance of our book and what we've been able to do with our credit models. Mm-hmm. Yeah, and quite frankly, that's what opens the door to collaboration partnerships. Yeah, right. Because the banks look at that, they look at the performance, they go, okay, this is credible. Right. We can work with this.
And that's a facilitator, as you said, right? That's your ability to pick it up from the UAE and say, okay, I'm going to find the right partner. I'm going to go to KSA. I'm going to show my performance of my book, et cetera. That's why I'm going to accelerate your plan to lend to that segment,
Absolutely.
By years, right? Because in order for them to, let's say, build something of any sort of similar performance is going to take significant effort. On that point, you've done very well here in the UAE. You've gone to KSA. Things are moving very well there. Other regional expansion plans?
Yeah, so I think for us, 2023 was a particularly interesting year because we had a major shareholder come in and take a majority stake.
Yeah, congratulations.
Yeah, thank you. That's EAND, which is obviously a $50 billion organization that is going heavily into technology on a global basis, but has a huge MENA reach. I think they've got something like 170 million customers. Right. So the exciting thing for us is how do we exploit the synergies?
Yeah, how do you leverage that?
At the moment we can see so many synergies. The key is keeping focused and saying, right,
pick your fights, right?
Exactly. It's it's easy sometimes to just think, there's so much opportunity here. What we've got to do is we've got to be disciplined, and we've got to say, okay, how do we go after, I guess, the low-hanging fruit? We can see some of that. They've got 80% of the SME market in the UAE, right? So we're only scratching the surface yet. So I think there's huge potential still for us in the UAE. We're still huge potential in the GCC, but we will be keeping an eye on other markets as to, if EAND are in those markets or if EAND are going to make acquisitions in those markets. Are the synergies or potential collaborations that we can do and almost get pulled into markets rather than us say, okay, I want to expand for the sake of expanding. I want to just follow the opportunities. So I think definitely we will do some. Whether we do that in 2024 or 2025, 2026, I guess is still to be determined.
A lot of times on these things, people talk about technology. They talk about, their voyage, et cetera. You and I had a chat recently, which stuck with me, right? Which is a little bit outside of the norm, right? And it was about the concept of people and culture, right? And you did impress me, Craig, right? So it's nice, I think, if you share a little bit about, let's say, because as a FinTech startup, right, you focus on, let's make sure the tech's good, let's make the user experience good, all that sort of thing. But I think that a lot of time founders neglect, let's say, that HR, culture, mission, focus. How do you attract the right people? How do you retain the right people? Yeah. And I know you've done a lot of work on it, Greg. So, maybe share a little bit around that.
Yeah, no, you're right. I think it's easy at times just to focus on, as you say, tech and all the kind of entrepreneurial aspects
Right.
that you're worried about. But actually, you really do have to build an effective team. Right? And one of the things we've gone into 2024, and as part of this acquisition with Ian, what's been a real eye-opener for me is that it's just reinforced you've got to set out an exciting vision for people, first of all. Right? And once you've done that, then they can start to build around that. Right? Then they can start to buy into it. Okay, we need these tools, we need this approach, we need this cultural mind shift. Right? Because, for us, we're going through a journey where I'm challenging all my people. We want to 10x the business, right? I want to 10x the business in 3 years. That can be a big ask for a company that's already 10 years old, right? It's one thing 10xing from $1 revenue to $10, right? It's different when you're already a kind of scale organization.
Yeah.
But it's amazing how that has unified the team. Excited, scared them a little bit as well, right?
That can be exciting and be daunting, right?
Exactly. But then when we start to break that down, what does 10x mean? Well, it means let's do 2.5x this year, and then just double it next year, and then double it the year after, right?
You break it down into components. That
absolutely. And I think
versus a mountain, let's get to the first. Let's say the first level, right? That first hill.
I think it's so important, but, one of the things I said to my kind of management team only a few weeks ago was, look, very few people get the opportunity to 10x a business, right, in their career.
True.
So wouldn't it be great if we're sat here in 3 years' time and you're saying, I was part of a team that 10x'd a business, right? Not only what it will do for their careers going forward,
right?
But it's about shifting from almost a scarcity mindset to an abundance mindset. And once you start shifting to an abundance mindset, and I'm turning around to the team and saying, listen, guys, we're doing probably 0.25% of the market at the moment. So what I'm all really asking you to do is let's do 2.5% of the market.
Yeah.
And once you break it down and once people can see it's almost bite-sized chunks, and yes, my job is to kind of lead and inspire, but it's also to make sure my team have got the tools, they've got the necessary resources, we've got the right people sat in the right seats, and we've got the right kind of
and hopefully they're challenging you back, right?
Absolutely.
And saying, look, Craig, it's not, I don't no question, the market's there, of course, but if we don't do this, and that's when everybody starts to kind of get on the train and collaborate in order to reach that goal.
Absolutely. And I use this phrase a lot, but I am the conductor of the orchestra. Everybody should be able to play their instruments better than I ever could.
Yeah.
Right.
Well
but I'm responsible for getting the right sound out of that. So I really like it when you can see people kind of passionate about something. They're really bought into it.
Yeah.
They're putting some trust in you as well. Yeah. Right. And of course, you put the rewards in place, you put the incentives in place, but first of all, they've got to want to do it themselves. Money alone's not going to be the driver. Right. So for us, we've really started to focus on culture, because whether you're a tech business or not a tech business, first and foremost, you're a people business. Right? The right people in the right roles will move mountains.
Right. Well said, Craig. Again, thanks so much for coming in. I know you've got a lot on your plate, but it's great just to take a step back for a few minutes and appreciate what you've done, right? And share with people, let's say, your experiences. So thanks for coming in and spending some time, and all the best of luck in the future.
Thank you very much. Great to be here. Cheers.